Good afternoon, traders. This is Matthew GS. We are 9th of February 2025. It's 5:05 p.m. in the UK. Hope everyone's doing well. Hope everyone's had a great week. It's been an explosive week in the markets, as you can see from the trades that I placed in the free Telegram group, which is completely free to join, by the way, called Trademasters, link in the description. I have placed some really good trades this week, caught some really good pips, and as always, we will be going through those trades. Please subscribe to the channel if you are new. If you're already subscribed, I really do appreciate that. Hit that notification bell so you're alerted every time that I upload my videos. And we are affiliated with FP Markets, so we get to use any lot size in any markets. Really good broker. Very happy with FP Markets. I am affiliated with TradingView, so if you want those 20 alerts on the basic package, I do have an affiliate link in the description. Appreciate if you did join, you did through that link, just supports the channel. And at the end of the video, I'm going to be sharing the economic calendar news for next week. So this is how I trade the financial markets, how I trade Forex. The strategy, if you have been following along, is 5-13-62 EMA strategy. The 5 and the 13 and the 62 are all Fibonacci numbers, and the market just loves to react around these levels. So if you are new to the channel, please go and watch video 1 on how to set up all the alerts and the indicators and all that good stuff. So let's dive straight into this. I'm going to be looking at the first trade I placed, and this is actually GBPUSD. And again, this was nearly a 200 pip trade once again. One annoying thing that I'm not too happy about in the CTrader app is it doesn't actually tell you your current pips that you're up in the trade on the mobile app, which is a little bit annoying. Once you're in the actual app on the computer, it tells you your current pips, which is pretty cool. But yeah, on the mobile, I don't know if I'm doing something wrong or I'm looking at the wrong thing. If anyone knows to see the current pips in the mobile app, please do let me know. But I had done a rough guess that it was around 200 pips up on this GBPUSD trade. However, it was around 170 pips that the trade was on the sniper entry on the 62 EMA. So what happened with GBPUSD from the Monday, we started the week below the 62 EMA. We had a massive sell-off, and we started to retrace to the 62 EMA. We did get this rejection down here. We come into this institutional candle here, so there was a potential for a sell-off. Market decided it wanted to go higher, and then we got a pullback, and we did have all three EMAs go off. 5, 13, 62 is all crossover. So this is a very good sign that we're actually going to switch now to the opposite side, in this case bullish. So once all the three EMAs have crossed over, I did get the alerts that the 5 and the 13 has crossed over, because we can't have 5, 13, 62 as a crossover alert, because that's 3 alerts. Anyways, we got the alert here, and then we got the pullback into the 62 EMA and the 13 EMA. So this can be a sniper entry here, and I will be going into an update for the strategy. But let's say you got the sniper entry here. From here to there is around 160. Actually, let's get the magnet off. So if we done a sniper here to there, it's nearly 170 pips. Right here to there is nearly 170 pips, right? So I actually bought, as that I see that it was rejecting away from the 62 EMA. So I bought here, and as you can see, we've taken off from this zone, and the good target would have been this high here to get taken out, which that did get taken out, and then the market has just sold off from there. I didn't catch the sell, but I was happy with the buy. So GBP USD was a great trade. Now, as I'm here, I'm just going to give an update, and one of my trading partners, who have been known for many years, we have been in discussions that I brought it to him that when I'm market executing the trades, which means that we buy instantly into the market, it can be challenging to properly work out your risk management because we are just buying into the market. But the thing is, the market can go against us. It's all good if it goes in our favor, but if it goes against us, the risk management isn't properly worked out, and you can do that in advance, but you're kind of guessing each time where to put your stop loss. Like, am I going to put my stop loss behind this candle? Am I going to put it behind imbalance? There's lots of variables, and you could have a really massive wide stop loss, and your stop loss needs to determine your actual lot size that you're going to use. And it gets a bit technical, but anyways, using market execution isn't very good for working out risk management. So we have come up with an improvement for this, and we've done a little back testing for this new way of placing these trades. It is going to be a limit order, so we are potentially going to get rid of market executions completely, and we're only going to be placing limit orders moving forward with the strategy. We still have to test this out, so next week we are going to be testing this out on a demo account first, just to, because this is what you have to do when you're trying new things, always test in a demo account. So we're going to be testing these limit orders, so we're still going to be catching these moves right higher, so we're still going to catch this move here, but our risk management is worked out in advance before this happens, and this is going to be a game changer, and we can see it working, and it will work. So yeah, really looking forward to testing this out. Once we've tested it out and it's all working fine, I will give these updates to the strategy, and this is what professional traders do. They work out their risk in advance, and that is the proper way to trade. So just a little update there for you. So it's always good to follow along with the strategy, just so you're up to date with everything that's going on. Okay, moving now on to the next trade. And the next trade is US 30. So if we look at US 30 on the Monday, it was a very similar kind of thing where we've started bearish, and then we've had the pullback to the 62 EMA. We've actually broke the EMA again, and then we've had the pullback to the 62 EMA. So we've had all three EMAs crossover, then we've had the pullback down into the 62 EMA. We did not get the touch to the institutional candle down here, the last down candle before that move. We kind of nearly got down there, but not quite. And price could not break through the 62 EMA. We've got the rejections away, so I've gone in for a buy. I have market executed on this occasion because we are still to test the limit orders. And this is the trade here. So this is this trade here. Okay, we've had the rejections away from the 62, and then we've had a pullback again. I think it's a liquidity sweep. Yeah, we've had a liquidity sweep here. Can you see how this is wicked down? It's taken out all these guys, and actually looking at this, it's actually hit this institutional candle down here. Can you see how it's wicked down here? So we could have placed the buy limit here. This is a good opportunity to know what a buy limit is. So a buy limit is here. We set our risk in advance, right? And then TP 1. I mean, that would have been perfect to get up to here. We didn't quite get there, but that would have been great. But this is a reversal zone up here, because this is the last up candle before this down move. So we've mitigated their positions here, and then they've sold off from here. So this would have been a great sell, and this would have been a great place to have your take profit. So this is a 1 to 6 trade from this buy limit here, and then catching the sell from up here. This is another good opportunity to know what a sell limit is. So you could have a sell limit up here, and then this is the sell limit entry there, stop loss just above the high there, and then take profit, say there. So that's pretty much a 1 to 4 trade from there. So for the buy, US 30 was great, and then for the sell, US 30 was also great. Being above the 62 EMA is a little bit on the riskier side to sell, because this could just carry on going higher. But this is what we're saying about setting your risk in advance. If you're just risking 1% of your account here, if it hits your stop loss, then you've only lost 1% of your account, right? So US 30 has been great. Really happy with that. Moving now on to Bitcoin. And Bitcoin, again, Bitcoin, it started the week below the 62 EMA. So we are bearish. We've come into the 62 EMA here. And this was a great opportunity to short the market. And selling there would have been great. Take profit. This is a good take profit zone here. So this is like a 1 to trade. The market has been bearish all week. We have had some touches into the 13 EMA for some more sells. You can see we've had a sell opportunity there, sell opportunity there, sell opportunity there. Then we've had a liquidity sweep, equal highs here. They all got taken out. They got taken out. This is wicked up. It's hit the 62 EMA. So the 62 EMA alert has gone off. Another beautiful opportunity to sell the market here. And then prices just reversed from there, and would have been a good to have your TP1 actually here, just taking out this low, which it pretty much has done. So that would have been a great trade to catch on Bitcoin. 2 opportunities. We had 2 touches to the 62 EMA, which is perfect. Where Bitcoin price currently is now is at 96k. So this is just on another broker. We still had the 62 EMA. But we're going to get lots more data, lots more movement of Bitcoin through next week. I do not trade Bitcoin over the weekends, not just because my broker is closed, but I just think it's a bit silly really just to trade over the weekend. Like, it should just be time for family, friends, recharging, learning, all that good stuff. So anyways, Bitcoin is at around 96k. There was good opportunities to short Bitcoin, so very happy with that. And just want to finish up now with EURUSD. Now, EURUSD from the Monday again, it's all looking quite similar really, where we just had a massive sell-off and then prices decided to come back up. We've hit the 62 EMA. There was a reversal zone here. I did actually have a sell limit on this institutional candle here, and then the stop loss was here. So this is the reversal zone. Did get stopped out. You can see how this wicked up. So I did get stopped out for this sell limit, but then price did decide to go lower, but I did not catch this move, and then this actually did wick up. Yeah, this actually wicked up this very last candle here. So we've gone lower, and then we've got the pullback. They've mitigated their positions, so they've got break even. So this would have been a great opportunity to have a sell limit here, stop loss above that candle there, and then this would have been a good TP1 there. And I mean, we're still going to potentially go lower there. So some good opportunities with EURUSD. And unfortunately, like I mentioned, I did get stopped out on EU, but nevertheless, it's all good because I did catch some other great trades. So all in all, very, very good week with this strategy. Like I mentioned, again, moving forward, some improvements for the strategy is from next week, we are not going to market execute. We're not going to be placing trades, getting instantly into the market. We are going to be setting limit orders. So if you don't know already what a buy limit is, a sell limit is, a buy stop and a sell stop, I highly recommend watching my video that explains all the different types of trades. I will link that in the description and above. And I would also suggest placing these types of trades and practicing how they all work, because you need to really know what these types of trades are, because these are going to be used moving forward for this strategy only, and hopefully we get some success through this, because these are the best ways of working out our risk management. Now, I did mention on the stream a couple of streams ago that I'm going to give some homework, some studying. This is totally optional. You don't have to do this if you don't want to, but some people like myself like to study and learn, because this channel is all about becoming traders and professional traders. So it's good to have some homework now and again and really understand what this is. So got 10 questions if you wanted to answer them, and I'll give the answers next week. First question is, what is imbalance? Again, if you don't know what imbalance is, I have done a video on imbalance, so I'll link that again. So draw imbalance zones on your charts. Did price fill these imbalance areas, right? So some examples you know that you've drawn imbalance, right, is when it wicks up, fills in that area, and then just completely reverses. That's when you kind of know that you're drawing your imbalance zones correctly. So go ahead and draw your imbalance zones and practice that. Question 2, what are the different types of trades you can place? So I just mentioned this earlier. What is a market execution? The limit orders. What is a buy limit? What is a sell limit? What is a buy stop? What is a sell stop? Place all these types of trades. Again, I'll link the video explaining all of these. 3, what is Fibonacci? Question 4, what numbers are 5, 13 and 62 relating to Fibonacci? Are these Fibo numbers? So are these Fibonacci numbers? 5, what is a short? I mean, if you're a complete beginner, then you're not going to know what short is, but if you are a trader that is quite advanced, or you know some of the basics, you should know what a short is. What is the Kiwi? I mean, quick Google search is going to tell you what the Kiwi is relating to trading. What is US 30? What companies are the top 30 companies at the moment for US 30? So list them all. Question 9, what is an institutional candle? And question 10, what is mitigation? Like, most of these things I have covered in this video. So if you're scratching your head like, what is mitigation? Watch the video again. It's not going to be something that you can really Google and find the answers to. You all have to watch my streams to understand this stuff. So that's pretty much it for this video. Just going to finish up with what's happening in the market next week. And as always, it's probably going to be a busy week. Donald Trump is back in power, and the markets just really love to move when he's in power. From experience from last time he was in power, he could just send a tweet out. This time it's obviously called X, but a simple tweet from Donald Trump and the market just goes crazy. So I'm expecting a lot more of that with him being in power this time round for another 5 years. And let's just see what's going on next week. Monday, not much. Tuesday, nothing really. Wednesday, okay, Wednesday is looking like a busy day. We've got some red folder news on Wednesday. Thursday, GBP red folder news, and US red folder news. And then Friday there is some Euro red folder news, and finishing up again with the US dollar red folder news. So as always, it's going to be a busy week. Appreciate everyone jumping on. Just ending up that if you're brand new to the channel, please do subscribe. You can hit the notification bell to know when we have posted those videos. Telegram group is free. Appreciate everyone jumping on. Let's have a great week, and I'll see you in the next one. Bye.